Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on euro currency. To be honest, not too many things that we could discuss, especially on the lower time frames. So because you can see on Friday, actually, we've got the inside session. Just a couple of moments for discussion. So first of all, market stands now in retracement. If you take a look at the monthly chart, it becomes obvious that retracement stands due to overbought situation. This market because stands very close to the monthly OP around 119 area, and normally market is tending to complete the target, especially if it stands very close to it. But since retracement started, we could make two conclusions about it. First of all, this is mostly due to the overbought, so it doesn't break the overall bullish context. It's just technical reaction on an overextension of the market, some statistics tools that make impact on the price performance. Second, this retracement should be not too deep. So weekly chart tells that it could reach an area around 112.50, 113 area. It's just based on this harmonic swing, and actually on the weekly chart, the first fib support area, nearest 30% support of the upper direction, stands around 113. Also there we have the weekly oversold. But because of the nearest ending of the monthly target, retracement might be smaller, and from that standpoint of view, I would also keep an eye on an area between 115.50, 116 by the two reasons as well. So first reason is because there we have the weekly MACD line, and potentially the bullish grabber might be formed around, which will be probably not of this week, maybe, but within the 2-3 weeks it might happen. And this potential grabber might be very interesting, the cornerstone for possible upward continuation and reversal, and completion finally the major target around 119 area. First moment. Second moment, because even on the daily chart you could see that here we have a support cluster, some harmonic swings as well, daily oversold, also we have the fib level, some extensions. So that's the reasons to keep an eye on this level as well. So speaking about big picture, if we take a look at the monthly chart as well, as you know, we keep the shape of the hand shoulders for a few months already there, and previously it was some concern and actually riddle why and actually how these hand shoulders might form. Last week we have disclosed some possible reasons, but they were technical. If you remember, we talked about big charts, yields, 10-year bonds, quarterly chart, the mortgage rate, also the long-term quarterly chart, rising of the yields across the board, Japan, United Kingdom, rally across the board in commodities, precious metals, whatever, copper and other stuff. And today we have prepared, I think, a really important report because it put the foundation, actually the background for the market performance and the United States economy for a long-term period, half year, the year, maybe even longer, because we explained the technical reasons how this really could happen, and we explained why actually the jump in yields might happen. All the stuff we consider based on the recent news. So if you just briefly take a look at the Twitter, you will see a lot of posts where people are mentioning dollar falling, commodities rising, here are some indicators of the money supply, debt, deficit, and all this stuff. But just few people could mention the recent speeches from some big economists who point that the period of the low rates are coming in the United States. And they explain why, and this report, we explain why they're talking about this, where these problems with the liquidity in the United States are coming, why this period is unavoidable for now. We could be wrong on a particular point where it could start, but this is relatively short-term range, short-term period, 1-2 years. But obviously the period of the negative interest rates in the United States will come. And that particularly explains why economists, former Fed chairman, start talking about zero rate, why they speak that the zero rate will be not enough this time to support the economy, stimulus will be needed. So that explains everything. We just count some numbers and show you where there are really interesting results. So I think that it's definitely worth it to read, and because it explains many things, and actually it put the background for markets, for the forex market as well, including the euro currency, and explains why actually the hand shoulders that we have on the monthly chart, I will just remind you how it looked like. Here you could see a big pattern, why it is not limited with just 120. Later, with the forming of the right arm, or who knows, maybe it will be straightforward breakout. We do not know, because here is really healthy acceleration stand. Why its pattern is not limited with at 120. And the background that we discussed today in the fundamental part of the report explains why this leg could start. So, speaking about short-term picture, on the daily chart, as I said, not many things to do. On the follow time frame chart, I would mention the grabber. So in fact, currently our task is to catch the proper dip for position taking. But in this point, it is still uncertain whether the dip will be limited by the scale of the daily time frame, or it will also touch the weekly time frame, where it might be deeper. And actually, we could see a 113 area maybe. Although I think that the chance for that are much smaller than to get retracement around 116 or a reversal in 116. Meantime, for a Monday open, we have the bearish grabber. Grabber suggests taking out of these lows. So we said that without clear bullish reversal pattern, or reaching some strong support area and getting pattern later, or sharp upside acceleration, we are not considering taking long position. With the minor grabber on the back, suggesting taking out of these lows, in the beginning of the Monday, probably it will also, we get no chances for taking the long position. So because none of the mentioned tools exist right now on the market, so we need to wait. The same we could say about the hourly chart. Let's take a look what's going on. Here's minor grabber. I wouldn't actually consider it as a real pattern that could change something, because its target stands just above this top. So its nearest target stands here or just here. It actually makes no impact. No patterns, very wobbling and overlapping performance. I mean, candles are overlapping. Very heavy, without any acceleration, some kind of the churning action around it. Obviously not the point for taking the long position by far. So from that standpoint of view, I think that on Monday we're still waiting, see what will happen. I suspect that it might last for a moment until we get real results of the negotiations on the tariffs with the European Union. I think that investors stand quiet, particularly by this reason. Yes, Donald Trump intends to make some statement about Russia on Monday, but I suppose that hardly it will make impact on the markets. Everybody are waiting for results of the tariffs negotiations in the European Union. And that explains why markets stand so quiet. So let's hope for the better, that probably maybe we will get some trading steps on the next week. But this week, as you know, was actually not many things that we were able to trade here. So that's probably all for now. Let's see our results for the Monday and return back to this subject on Tuesday.